This is Matthew Cratter from Trader University, and today I want to talk about why Ether will go up more than Bitcoin. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. Now, a lot of people are going to find this title very controversial, especially because I'm considered in some circles to be sort of a Bitcoin maximalist, which I may or may not be, depending on your definition of that. But what I mean by this is that I think in the current bull market, we're currently in a cryptocurrency bull market. In this bull market, I think that ETH will continue to outperform Bitcoin. And this isn't controversial because, as I said, it has been outperforming Bitcoin. If we just look at the performance year to date, ETH is up about 175%. Bitcoin is up 49.50%. Now, why do I say this? Well, let's just kind of rewind and talk about what crypto bull markets look like, at least what we've seen so far. And obviously, this is a very new area, so we can never be certain. But this is my hypothesis. Crypto bull markets happen over the 12 to 18 months after the Bitcoin halving, and they're driven by all the excitement surrounding by Bitcoin. Bitcoin is the big daddy in the space, and so it is the one that has the name brand and gets all the media attention. And so when Bitcoin begins to go up a lot, it gets people's attention. Now, and it tends to go up a lot right after the halving. The most bullish part of the Bitcoin 4-year cycle, it halves every 4 years roughly, and the most bullish part of that cycle is the 12 to 18 months after the halving. So to give you an example, the previous halving was in July of 2016, and then we had this big run in Bitcoin. It took a couple months to get going, just like it has this time, but then Bitcoin peaked about a year and a half later in December of 2017. Now, there's sort of a market rule that works in stocks, and it seems to work in cryptocurrencies as well, is that in strong bull markets, especially as you get toward the end of them, riskier assets outperform less risky assets. And the way this works sort of psychologically is people see that Bitcoin has gone up a lot. They see that the price of one coin is very expensive, and maybe they don't realize they can buy a fraction of a Bitcoin. They don't have to spend $15,000 or $20,000 for a Bitcoin. But instead, they're tempted by lower price stocks like a penny stock, or lower price cryptos, maybe something like XRP, which has a huge supply overhang, but it makes it look very cheap because of that, simply because there's so many XRP compared to how many Bitcoin there are. So what happens in a bull market is what equity analysts will say is they'll say that high beta outperforms lower beta. And this is just shorthand for a high beta stock would be something that is up like 2 or 2.5% if the S&P 500 is up 1%. In this case, we would say the stock has a beta of 2.5 because on the typical day when the S&P is up 1%, the stock is up 2.5%. So this is sort of finance jargon for more volatile, risky stocks, which will go up more in a bull market and will go down more in a bear market. So I would say that Bitcoin is sort of the stable reserve asset of the cryptocurrency space. It's the most conservative asset. It's the one that benefits from the Lindy effect the most. It's been around the longest. It has the largest market cap. It has the most institutional interest. It has the most liquidity. It has the highest hash power in the network, etc. So it really is sort of the gold of the space. But this doesn't mean that it will necessarily outperform. And that is, a lot of it is just math, for example. So smaller market cap stocks have the potential, it doesn't mean that they will, but they have the potential to outperform larger market cap stocks simply because when you have flows, so let's say we have a $100 million cryptocurrency, a cryptocurrency with a $100 million market cap, and then we have Bitcoin, which is currently around a $200 billion market cap. If you get $100 million of new money flowing into that small crypto, the one with a $100 million market cap, the market cap should roughly double. It should go up about 100% because now you have $200 million sitting in that cryptocurrency. But if $100 million flows into Bitcoin, which with its $200 billion market cap, the market cap barely budges. It just goes up maybe 0.05% if I've done the math wrong and haven't messed up the zeros. And so this is why we'll often see penny stocks, we'll see small cap or micro cap stocks go up a lot when they go up, but they can also go down more So for example, if $100 million exits this when it's at $200 million, the stock will drop, the cryptocurrency will drop 50%, whereas Bitcoin will barely budge if $100 million exits. Now these are simplifications. Obviously buying and selling and price discovery happens at the margins, but you get the general idea that smaller market cap things are easier to move than large market cap things. Just like when you have a net worth of $10,000, it's much easier to double your net worth or 10x your net worth, whereas if you have a net worth of $100 billion, it's much more difficult to double or 10x your net worth. So a great example of high beta stocks, risky stocks versus low beta stocks or less risky stocks was the dot-com bubble, which of course happened in the late 90s. And we had stocks like pets.com, which were spending money on Super Bowl ads, and they didn't really have profitable businesses. And they were outperforming a lot of these quote-unquote internet stocks, which was kind of a bad word back then. Now it's more of a good word. These stocks were outperforming sort of the old stalwarts like Intel and Microsoft and Cisco, etc., on the way up, like in 1999 and the first couple months of 2000. And then we had the great bear market of 2000 to 2002, and so both stocks really crashed during that period. The difference is that pets.com went to zero. I can't remember how much Microsoft went down. Maybe it went down 70 or 80%. It still went down a tremendous amount, but money flowed from the riskier names in the space, these very speculative .com stocks, to the less risky stocks like, Cisco, maybe Amazon, Microsoft. And this is what happens if you're running a tech mutual fund and there's a big bear market and you don't want to get in trouble and you don't want to lose your job. Well, you're not going to get fired for owning Microsoft. If you're supposed to, you can only own tech stocks. But if you own pets.com, you might get fired. So you sell your pets.com. Eventually, pets.com files for bankruptcy or whatever happened to it, and all the money ends up in Microsoft at the bottom of the bear market. And again, it's good to point out, pets.com was a great trade. You really outperformed Microsoft for a while. But if you're interested in something as a long-term investment, and in that case, Microsoft is obviously still around today. It has a market cap in excess of $1 trillion, and pets.com has been dead for 20 years. Now, something similar happened in the previous bull market in crypto, and it's a little bit of an unfair comparison because ETH had just come out a couple of years previously. I believe it came out in 2015, and we're really talking about a 2017 bull market. ETH had a much smaller market cap than Bitcoin at that point, as it still does, and it had a lot more room to grow on the upside, simply because it was coming out of such a small base. And so during that big crypto bull market, ETH really outperformed Bitcoin on the way up. But then in the bear market, which we're really just coming out of, the bear market that started at the end of 2017, beginning of 2018, and really continued until, depending how you measure it, maybe the end of 2019 or the March lows in 2020. At this point, Bitcoin, ETH finally began to outperform Bitcoin. So ETH outperforms on the way up, Bitcoin outperforms on the way down. And so at the bottom of the crypto market, maybe in late 2018 or late 2019, I should have said late 2018. If we look at a chart of Bitcoin, we can see, it was really the real bottom was in late 2018, and then we had sort of a second higher bottom in the liquidity crisis of March of this year. But what I was saying is that at the bottom of the bear market, so in December of 2018, everyone all of a sudden becomes a Bitcoin maximalist. Everyone says, well, all these other coins are garbage. I'm just going to hold Bitcoin. And obviously, there'll still be some people holding XRP or whatever. But most people, on the margins at least, will have moved out of Bitcoin, out of the altcoins or other cryptocurrencies into Bitcoin. And this is ironic because that is the point at which the new crypto bull market begins again. And from that point on into the bull market, every other crypto is going to outperform Bitcoin simply because it has the largest market cap, as we said, it's lower beta, etc. And so, ironically, the crowd is wrong on both sides. At the peak, they're holding mostly altcoins, they get killed, and then at the bottom of the bear market, at the bottom of the crypto bear market, they're holding mostly Bitcoin, if they hold any crypto at all, if they haven't been wiped out. And this is ironic because Bitcoin will underperform the other cryptos in the new crypto bull market, which we're in right now. Now, altcoins, you can make a lot of money in them, or other cryptos, I should say. But the problem is if you end up in an exit scam, if something gets frozen, if you get dumped on by an insider, which is what's been happening with XRP, then of course you're not going to outperform Bitcoin. So these are the risks. It's just like buying Pets.com. Pets.com did not have a real business model, at least at that time, and Microsoft did. And so even though you outperform, it can be very tricky, and you need to follow price action very closely, like I teach in my courses. And so it's really a different game from long-term investment. We can see here that these are the year-to-date relative performances of crypto. As I said, ETH is up 175%, Bitcoin's up almost 50%. And then we can see these names, XRP, Bitcoin Cash, and Litecoin, are actually lagging even in this bull market, which is a bad sign because they're more risky, and yet they're still underperforming. Though we can see on the downside, so we've had kind of a mini 1 month bear market in crypto in September as risk assets have sort of sold off across the board. And whereas Bitcoin underperformed in the bull market this year, in this mini bear market, Bitcoin has gone down the least. So Bitcoin is down about 8%. XRP is down about 14%. And we can see this is a problem because on the upside, it underperformed. And now on the downside, it's going down more than everything else. ETH at least had the advantage of really outperforming on the upside, being up 175% and then being down 16% September month to date. And again, we can see Bitcoin and Bitcoin Cash and Litecoin. This is a very, very bearish sign for them that they're down. They underperform. They underperform in the bull market phase here. They're not up nearly as much as ETH or Bitcoin. And then when things sell off, they sell off even more. But what we would expect is that Bitcoin would hold its value better in a sell-off, and that's what we've seen. Here's a chart of performance year to date. The top turquoise line here is Cardano, ADA, which I'm not a fan of, but again, it has outperformed quite a bit. It's up something like, call it 200% year to date. The red line here is ETH, which is up, what did we say, 170%. Bitcoin is down here, still respectable, up about 50%. And then, as we said, XRP and Litecoin underperforming the whole time. And so it's interesting to see charts like this. I wouldn't be surprised if Cardano continues to outperform over the next 12 to 18 months. Still, it's not something I want to own. I'm not super comfortable with proof of stake or with the founder there. But we can see that it doesn't, the market doesn't care what I think. The riskier assets can definitely outperform Bitcoin, in this case ETH and Cardano, ADA, outperforming Bitcoin on the way up. We can see here, especially after the summer peak, that Cardano has really crashed. It was up, 350%, and now it's only up 2%. And so when things begin to pull back, you definitely get hurt more in the high beta names. Here's that chart of Bitcoin with the late 2017 peak and the late 2018 bottom. I wanted to give you an example of sort of a high beta stock versus a lower beta stock. We have Overstock here, which is the blue line, Amazon, which is the red line, and this is just measuring the performance since the bull market really took off when the market rebounded in April. And we can see that Overstock is up something like 500%. Of course, a lot of this is due to its crypto projects in the work, but it's sort of it's still thought of sort of as an e-commerce name. Obviously, I'm comparing apples and oranges here a little bit, but Overstock's definitely a high beta name compared to Amazon. Overstock up 500% or something like that. Amazon still up really respective in an amazing manner, up something like 37% off a much higher base, off a $1 trillion base. So it's gone from 1 trillion to 2 trillion or whatever it is. But this is an example of high beta outperforming lower beta. And then if we adjust the timeline here, we can see that from the peak, from the peak of this run, Overstock is down something like 38%. Amazon's only down 3%. So we've seen something similar, where during a mini bear market, there's a flight from high beta names into low beta names. So one thing you can watch, one way you can measure this, is just looking at Ethereum, looking at Ether and Bitcoin as a pair. And we can see, as we would expect, that during the bear market, basically, if this chart goes down, if the line goes down, that means Bitcoin strengthening. If the line goes up, it means Ethereum is strengthening. And so here we see very clearly that during the great bear market, really going to the end of 2018 and also into the end of 2019, ETH really underperformed Bitcoin. Bitcoin was strengthening. And then since the beginning of 2020, this pair has strengthened in the direction of ETH. ETH, as we saw, has gone up a lot more than Bitcoin. So I think this is another indicator. This is a useful indicator just to know whether you're in a bull or bear market. If ETH is outperforming Bitcoin, all else being equal, assuming ETH's not having major problems and Bitcoin's not having major problems as protocols, if ETH is outperforming Bitcoin, that's one of the signs that you're in a crypto bull market. So what are my conclusions from this? Well, in this crypto bull market, Bitcoin will lag ETH. That was what my title was about. And ETH itself is going to lag some riskier DeFi tokens or some riskier new cryptos. Now, so people will then ask, why not sell some or all of my Bitcoin and move it into ETH and other names? I may trade in and out of ETH. I may eventually invest in it. Right now, I have just a tiny position, just maybe $1,000 in it, compared to a much larger position in Bitcoin. But why not try to trade around this? Well, I think there are a couple reasons for that. One, ETH may not be around in 20 years from now. I think Bitcoin still will be. Certainly in 10 years from now, I think Bitcoin has a very, very high probability of still being around. And ETH may not be. I'm not sure ETH will survive the transition to proof of stake. And I should say parenthetically, I do really like Ethereum at this point. I like DeFi. I hope that it survives. So this is not like a Bitcoin maximalist saying, I hope ETH dies. But I do worry about proof of stake. I worry about Ethereum, whether it can scale. Gas fees have been very high, etc. So it's a more risky project than Bitcoin. It's a much more complex project. Bitcoin just does one thing and does it really well, which is store value. Ethereum has been many things over the years. I think the DeFi incarnation may stick around longer than most, but it still is a risky project. And as such, because it's more risky, you theoretically should get paid more for holding it if it succeeds. If it doesn't succeed, it can go to zero or go down a lot like any other cryptocurrency. But like I said, I do hope that it survives because I do like it and I do like the project. So this is a little bit like if Bitcoin is your Malibu beach house, it's very scarce. There's only 21 million. We don't really know the future supply of Ethereum. It's a little bit more ambiguous. And so the question is, do you sell I'm going to use a real estate analogy, which obviously has problems because real estate's not as liquid, etc. But let's say, do you sell your Bitcoin or sell your Malibu house and put the money into Miami and Las Vegas condos at the beginning of a real estate bull market? Miami and Las Vegas are the high examples of very high beta real estate markets. They'll go up much more percentage-wise in a bull market. They'll go down much more percentage-wise in a bear market. And so this is almost a question, do you sell your Bitcoin, which is like selling Malibu, and buying Ethereum, which is like buying Miami and Las Vegas, the more high beta names. Now, the problem with doing this is that you first need to pay taxes on your accumulated capital gains on your Malibu house. And I've accumulated capital gains, obviously, on my Bitcoin position. And so you have to pay taxes on that. You have to pay capital gains taxes, which are roughly 15 or 20% or 23%, depending on your income level. And so when you reinvest the money, when you reinvest your Malibu money into Vegas or Miami, you have less money to reinvest because you had to pay taxes during that transition. Obviously, you can do a 1031 exchange. I'm kind of simplifying, but with crypto, you do need to pay taxes when you exit your Bitcoin before you buy your Ethereum, for example. And then you need to, the other really difficult thing, I have no problem timing short-term investments. I like trading momentum stocks. But when you're talking about a long-term investment like this, you need to time when to get back in. You need to time when to sell your Miami condos and plow the money back into Malibu. And again, you're going to have to pay taxes on your capital gains on your Miami condos. And so the question is, will the Miami real estate, the condo real estate market have gone up enough to compensate you for the tax inefficiency of this trade, assuming you can't do a 1031 exchange or something like that? And so will it have really been worth it? Or maybe you should just sit in your Malibu beach house. I wish I had one. And just watch the surfers and not worry about making this trade. And that's sort of where I am with Bitcoin right now. I consider it very scarce, like a Picasso, like California or Hawaii Beach real estate. And as a result, I'm still happy to trade other cryptos, probably will going forward, and trade momentum stocks. But when you're talking about really large investments like this that you want to hold for a long term, a long time horizon, you have to consider the timing aspect as well as the capital gains aspect. And so if you want to pass something on to your grandchildren, if you have a Malibu beach house that you want to pass on, or if you have Bitcoin that you want to pass on, and there's a good chance that I'll never sell my Bitcoin, I'll pass it on to my kids and grandkids. And so if you want to pass something on, keep it in the family, like a family heirloom or something, it's very risky and very expensive to trade around that asset. And I think there's an especially large risk with Bitcoin. So Malibu real estate obviously can go up. I mean, it could go up 10% in a year or 20%. That would be huge. But Bitcoin is coming off a much smaller base. Bitcoin's something that can go up 100% in a year and then go up 200% the next year, etc. And there's a chance that, especially if Plan B's pricing model turns out to be right and we get to 100K or 200K or 288K, depending which model you use, in this cycle, people, institutional investors, wealthy investors in particular, will begin to front run the model and they will begin to price in. So Plan B has Bitcoin, according to his model, going to, I want to say $300,000 or $400,000 in 2024, and then something like $3 million in 2028. And if he is right this time around, what will happen is higher probabilities of Bitcoin getting to 3 or 4 million by 2028 will get priced in. So if you think Bitcoin's going to 3 million in 2028 and there's a 50% chance of it, the expected value of Bitcoin right now should be about 1.5 million. So what could happen is, because we're much further along the adoption curve this time around, there's a lot more infrastructure surrounding Bitcoin. What could happen is that Bitcoin doesn't really top in this cycle. And it doesn't pull back 80, 85, 90% like it did this time, but maybe it has a very tiny bear market. It goes down 10% off the highs, and then it really takes off again and goes into the millions. In that case, if I've sold my Bitcoin or sold a big portion of it, and I'm sitting in Cardano and ETH, I might be very depressed. And so this is something that, at least now, my thought is I should not try to trade around it. I'd like to know your thoughts around this, how you're treating Bitcoin, whether it's more of a short-term trade or a long-term investment. And if you found this video helpful, please hit that subscribe, like button, hit the notification bell, drop your comments in the comment section below. And thanks a lot for listening. I'll see you in the next video.